started.
Hi, thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary and with me is Mathew. Before we begin, I'd like to remind you that you can send in all your queries through the YouTube live chat or through the WhatsApp number that's flashing on your screen or even through any of our social media channels. Now, let me introduce you to our guests for today. We have with us Mr. Dharmesh Kant, Head Equity Research, Chola Securities, and Rajesh Palviya, Vice President, Technical and Derivative Research at Axis Securities. Welcome and thank you for taking the time out. Before we jump into the questions, Alex, what is our BQ focus today?
Well, first of all, to the experts that have joined in, Dharmesh, as well as Rajesh, thank you so much for taking the time. And I thought this morning, initially, I thought that we would focus on the implications of the war that Israel is waging. But then I see that the stock impact has not yet panned out. So I guess we'll have to see the implications later. But I thought we could pick MCX because there was that significant development over the weekend where the SEBI has given it the go-ahead for its commodities platform. So from the fundamental aspect, Dharmesh, what are the benefits that MCX could get from this? And is this already in the price? Because we've seen a 17% odd increase in the price over the last month itself.
Yeah, good morning, Alex. Greetings for the day. See, what has happened with MCX with this onboarding of TCS software platform, what it will do is it will reduce the cost of operations. And that is it, because how the revenue will have a further traction, the business side of it is not the question at all. And that is where the things are coming up from. Assume and what's the cost they will be paying to TCS for this software is still not being clear. They have not indicated a price or what is the kind of savings which will be done. Going by what the sources or the markets are expecting is around say 80 to 90% kind of a gain, and that gain would be almost equal to the top line they are making. So profitability will definitely come back. And going by the valuation multiple, as you rightly pointed out, 17-18% kind of a move has already happened on MCX. So on trailing basis, it's trading at 85-90 times PE multiple. But if we discount the, assuming the impact of this change to the software, which will accrue in next financial year, it's still trading at around 40 to 45 times PE multiple, lower than 20%, which the BSE is commanding as of now. So still there is a room for further, upside bias, around 20% kind of a stock price movement can still happen from there. But that should be the end of it, because as far as volumes and business side is concerned, I have not seen any significant progress in MCX as compared to say NSE or BSE volumes, which have gone up significantly. And the products which they have in offer, these exchanges will also come up with a full foray and the platter of products which MCX has. So stiff competition already out there. So advice is for the clients who are holding the stock, they may continue to hold so. And in fact, they may have a trailing stop loss because fundamentally, I don't see it as a wealth creator from here on. Just 15-20% more top up or a pop up can still be on the stock price.
Okay, so very quickly then, Rajesh, why don't we get a technical view since on the fundamentals, as has been pointed out, Dharmesh doesn't see a significant upside. So what trailing stop loss levels would you suggest and what are the prospects on the charts?
So morning everyone. Looking at the chart, stock has managed to give breakout of its multi-year consolidation range. If you look at the overall structure on the monthly chart, stock is now giving a breakout of rounding bottom formation. So it's a multi-year, multi-month breakout on the chart. Looking at the setup now, one should trail their stop loss at 2000 level, and if it's a hold those level, then possibly this momentum can exceed further, and we may see a short-term target of 2250 to 2300 in the continuation of this uptrend. So overall structure is looking across all time frame. One should hold the position with stop loss of 2000.
All right. Let's begin with the questions. The first question is from Pushpanjali, and they want to know about Poonawalla FinCorp for the short term. And they've already bought the stock. They haven't mentioned at what price they bought it, but the stock is up about 2% today. So let's look at the technicals first. Rajesh, what is the view on the charts for the short term, Poonawalla FinCorp?
Rajesh, is it audible?
So yeah. So we have seen some correct move in Poonawalla in recent past. The stock is now almost trading near to its 100-day moving average, and since last couple of trading sessions, that level is very well intact by the stock prices. So overall, structure for long term is on the bullish side, but on the near term to short term, some consolidation activity is happening in the stock. So our advice is again, one can buy and accumulate for short-term perspective. Your stop loss should be at around 356, and on the higher side, once the stock manages to cross about 395, then possibly this stock can show good up move towards 430, 440 in short period of time. So one can buy and accumulate this stock in this consolidation range 355, 56.
All right. What about the fundamentals, Dharmesh? Poonawalla FinCorp also reported highest ever disbursements last week. So what are the fundamentals showing?
Yes, if you look at Poonawalla FinCorp for the last 5-6 quarters, the run rate has been extremely high as far as the disbursements are concerned. At the same time, the AUM growth has been extremely strong. So still the asset base is very small compared to the other NBFC space. It's still sitting in the AUM of 20,000 odd crores only. And going forward, what I believe is they have a plenty of opportunity scope to grow this business, and the management has been very aggressive. They have done the top management rejig, and after that, the things have been working on well for the company. The promoter is very gung-ho about the entire business space, and personally, he has been focusing into the business. So my own sense is that 25 to 30% kind of an AUM growth, that is the asset size growing, will be the norm for the next couple of years to 3 years kind of a time frame if you are looking at FY26. At the same time, the asset quality improvement has been significantly high, and every quarter and every update, management is citing about asset quality improvement. With the present ROA and NIMs of around 3.5%, I think valuation we should not be looking at as the historical or the comparative multiples of, say, price to book value of 5 or 6. What we are looking at is doubling more than 3x kind of an AUM growth over the next 3 years. So 20,000 crore is likely to go up to 60,000 plus crores in the next 3 years. Based on that, if one is looking at holding the stock for at least 2 years time frame, it's a doubler even from here. So, I mean, larger time frame price target is around 600 kind of price target for Poonawalla FinCorp based on FY26 book value. But if somebody is a short-term player, so as my colleague pointed out, one can play that out. But the bias is positive, and we are recommending our clients to buy this stock or accumulate the stock at every declines.
All right, there you have it, a clear view then on Poonawalla FinCorp. Let's move forward and talk about a stock that is a little bit under pressure today, and that is Cochin Shipyard. Gentlemen, this is a question coming in from Abhiram Pendarkar, and he's asking about a stock that he has already bought. He's bought at levels of 1038, which is very close to the current market price. Rajesh, on the charts, it's down about 3% in trade today. What are the triggers that you are looking at?
So overall, the structure is bullish. Yes, some profit taking is happening in the stock since last couple of trading session. Now stock is approaching near to its important support area of 1,990, which is very important support area on the downside. So if you bought for short-term investment perspective, you can hold on the stock as overall structure is bullish, and we believe that once the market stabilizes, this stock will again resume its uptrend. And once the stock crosses about 1,060, 1,070 zone on the higher side, then possibly we can see a short-term targets to 1150 to 1200 again in the stock on the higher side. So overall structure is bullish. You can hold your position even if you have appetite to average out the stock in the decline. You can average out around 1,000 level. Your stop loss should be at around 985.
All right. On the fundamentals then, a very quick view. What's the view on Cochin Shipyard, Dharmesh? Because this is from that pack of stocks that has done incredibly well in the recent past.
Yeah.
Would you say that the future earnings are priced in at the current level?
Totally, Alex. I think at the current levels, next 2 years earnings is already discounted in the price, and thereafter one has to take up also. I mean, if fresh buying has to be done, even if you're buying at a higher level, it doesn't matter as long as the other side of the trajectory is very clear, that is the upside trajectory. So one should wait for at least 2-3 quarters to see how the earnings are panning out. Is it panning out the way the stock prices moved, and what is the order inflow likely to be there? Not to forget, next year will be an election year, so policies and government kind of orders do change depending upon whosoever is sitting on the government. So we have to bear that in mind, and I think the present geopolitical tension was a right excuse to take profits in that. So profit booking is happening. Fresh entry is not suggested, Alex. I think if you're holding it, you will still continue to hold it, but fresh buying should not be there.
All right. So it's a hold on Cochin Shipyard from Dharmesh. Next up, we have a stock, Jubilant Foodworks, and the question is from Netra. They bought the stock at 505. What return should she expect in the next 6 months? Now, the stock has moved in the last 6 months negatively. No, 25% up, I'm sorry. Rajesh, what is the view for the next 6 months on Jubilant Foodworks?
So we are seeing that recovery is taking place in the stock, and since last couple of weeks, stock is consolidating in very narrow range. Looking at the overall structure, we expect that if once the stock crosses above 560 zone, then possibly this stock can scale up to the target of 580 or 590 in the short period of time. Overall structure is on the recovery phase. We expect that furthermore upside momentum we can see in the near term to short term basis also. So as the stock she has bought at around 505, she can hold the position now. Trailing stop loss should be at around 510, and we do expect that this momentum can exceed further. 580, 590 could be the possible target in next 2-3 month time frame.
All right. Dharmesh, what is the fundamental view on the stock considering the World Cup is going on and food companies may see a better business this quarter?
Yeah, I mean, this is a momentum run for all the QSRs, and that is what is happening in Jubilant Foodworks as well. So even Jubilant Foodworks or Devyani or Sapphire, every stock is seeing a price traction based on the World Cup, and consumption does increase during this period. So I don't think the earnings will be material enough to justify the valuation or re-rating of the valuation metrics. So they will remain where they are. I mean, just 3-4% kind of a move can be there on the EPS for this quarter and the upcoming quarter, that is the Q3. But beyond that, I don't see it to be a significant enough for re-rating. So what we have recommended is, Jubilant Foodwork can still be a trading player, but Devyani looks more fundamentally strong based on the kind of funding trajectory and growth we are witnessing. To be a portfolio buy and hold, fresh entry can only be with a trading perspective, since it's an event specific thing.
No, fair point. The next question is coming in from Rajesh Maheshwari, and he's asking about Globus Spirit. And this is not a very large stock in terms of market capitalization, but it has seen quite the ride over the last 6 months or so. It has touched highs of close to 1,300 or thereabouts, and it has come off quite sharply. So we'll take both a check on the fundamentals as well as on the technicals, but first on the technicals, because we've got Rajesh, who has already entered the stock, if I'm not mistaken, at a price of around 1,300, 175 shares he's got. And so therefore he's seeing quite the cut in his holding. On the technicals, what should he bear in mind?
So this is the fourth consecutive month where we are seeing stock is forming lower high low formation. That clearly suggests that some liquidation is happening in the stock on a sustained basis. So weakness is there on the near term as well as on the short term structure. Now stock is approaching towards its multiple support zone area, that is at around 770, 780 zone. So if at all the stocks manages to hold this support area, then some pullback action we can see from those levels. But again, on the higher side, 1,000 is likely to act as a major supply zone for the stock. That is the multiple supply zone on the higher side. So my advice would be, as he has bought already at a very higher price, so I think 1,000 is the level where again he should review that the stock. If at all anything positive comes or any positive development comes in terms of fundamental or on the technical setup, then he can hold on for his prices. But it looks difficult in the near term basis. But For short term, some pullback action we can see because the stock already in oversold trajectory, but 1,000 is likely to act as a steep resistance.
Okay. Any view, Dharmesh, on the fundamentals of this stock, Global Spirit?
Yeah, Alex, see, this stock has been seen many seasons for the last 1.5 years. Basically, the speed which it manufactures is grain-based, and because of Russia-Ukraine war, the volatility was very high in the wheat particles which they used to get it for the raw materials, and the molasses barley has also moved up quite. It has been very volatile. So input prices has been volatile, and because of that, I mean, the prices of this company stock price has moved up and down. But there are multiple factors as well this time around, because we are walking into an election year, and state governments can always levy us additional tax duty or something like that to just to be play a populist card as far as states are concerned. So one has to play with caution. I mean, even trading has to be done, then it has to be strictly with trading stop losses and strict target prices. I don't see a clear-cut trajectory for next 1 year for this company because of the volatility in the input prices, which are likely to be there. And this geopolitical development will add to the volatility going forward as well. And there are a couple of states which is known to take aggressive stance against alcohol producing companies because of their own reasons and the populist measure which is there. So my advice would be book out if you are holding it. There are other plenty of opportunities waiting in the NBFC, railway, infra space where you can have better returns.
All right. Do send us your questions on the YouTube live chat or on the WhatsApp number, and you can also send in your questions to the on any of our social media channels. Now, going forward, we have another question from Abhiram, and they're asking about Apollo Microsystems. Now, the stock is in the green and has given about 18% returns in the last 1 month. Rajesh, what is your view on Apollo Microsystems?
So overall, if we analyze the structure for the stock, that since last couple of months, the stock is in uptrend, and looking at the overall structure, we do believe that if stocks continues to hold above 62, 63 level, then possibly further more round of buying action we can see in the coming weeks. So one can hold the position with stop loss of 62. Upside target for short term is possibly around 78 to 80 rupees in the continuation of this uptrend. So overall structure is looking bullish, so one can hold with stop loss of 62, 63.
Okay. Sorry, go ahead.
Dharmesh, any fundamental view on this? Should he continue to hold Apollo Microsystems?
Yeah, we unfortunately don't cover this stock. It's a small company right now, and since we don't cover it, so can't comment on the fundamental aspect of it.
So why don't I then extend the question to the space? I'm looking at, just as you pointed out, right? It's a small company, less known. Maybe I'll do a little research on this after the show. But from the About Us page, it says that it caters solutions for railways, automotive, and homeland security markets. So from that perspective, I guess one could ask, from the broader universe, a lot of these railways or companies that play with the railways theme have gone up very significantly, Dharmesh. Is there any value to be found in that universe?
Yeah, I think Recon still merits a buy because that kind of upgradation railways will be witnessing over the next 6 years. It's a complete overhaul of the system, and the security system measures are being upgraded everywhere with the coverage playing out. And the government of India has already decided. I mean, the announcement has already come of 1 lakh crores of additional investment into the railways apart from the railway budget, which is already being outlined. Every year for next 6 years to improve the railway entire technology system. And now even, I mean, Vande Bharat train, Wi-Fi connections and everything is there. So technology is the thing which is will be the major, revenue earner for the people who are there in this segment of the railway infra and development. And their security plays a very important role. So I think based on those fundamentals, though the stock prices moved up and at 2022 kind of an ROE, 25% kind of a band CAGR, it looks expensive at 2022 kind of multiple valuation. But I think going forward, the type of orders which are likely to flow into these sort of companies, these are justifiable PE multiples. So one can even add at current levels, or if you are holding on, continue to hold. Again, this is again a 60-70% kind of a stock price of movement we are seeing over next 2 years on the earning basis. So this or RVNL do not exactly into the same space, but from the railway space looks very attractive to us.
Okay. Gentlemen, just to close out, I'm going to come to each one of you for your picks. But before we do, Rajesh, any view or any advice that you can share based on what you're seeing on the Nifty as well as Bank Nifty? What are the key levels to watch out for? And also, could you share your top picks right now?
So again, when we see a gap down opening in market, again, 19,500 put has attract again, writing activity. So I think for near-term perspective, 19,500, 19,470 are the key level to watch for today's session. That where we have a major put writing activities happening. So 19,500 should be your stop loss to hold your long position. On the higher side, 19,600, 650 are the key level to watch for in the near term basis. If at all Nifty crosses above 19,650, then there would be a short covering action we can see in the can take place, and then possibly Nifty can show further more pullback action. But for the time being, 19,500 to 19,650 is the range for Nifty. For Bank Nifty, the 44,400 is the key resistance area. Until we don't cross those levels, there won't be any short covering action will play out. On the downside, 43,700 are the important level to watch for the day. The picks which we are focusing at this moment is HCL Tech, very strong buying action since opening, and looking at the overall buying action in the IT pack, we expect that HCL Tech can continue furthermore upside, and possibly 1,300 is the possible target in the short term. One can buy with stop loss of 1240. The second stock that we like is from mid-cap space, that is Maharashtra. Seamless is looking very attractive, very strong buying action since opening, and the stock is now showing strength on the near term as well as on the short term charts. So we expect that Maharashtra Seamless can be a stock where one can buy for upside target of 660, 680. Upside target we are projecting towards 680, and one can keep a stop loss of 600. Some buying interest is happening in the pharma space, so Dr. Reddy one can keep on eye. Stock is recovering, and now one can buy with a stop loss of 54.60, upside target 54.70 to 55.70, 55.80 on the higher side.
Understood. Two of the stocks that you mentioned are the top gainers on the Nifty 50, Rajesh, incidentally today. Dharmesh, on the fundamentals, what are your top picks at this juncture? Of course, this is longer term in nature.
Yeah, definitely. See, Alex, since we are setting into the earnings season, so multiple recommendations I would like to hold, but one stock which stands clearly out is Reliance Industries. I think this correction and any correction thereafter should be a good opportunity to buy this stock. And this is a long-term call based on 2 to 3 years kind of earning trajectory and the value unlocking of the different businesses which will happen over this time period. So sum of part valuation, if you do based on FY26 earnings for Reliance Industries, comes to around 4,200 rupees. That considers oil to chemical, retail, geo, and the other businesses which the company is into. So we are recommending this to our clients to continue to keep on buying and in a staggered manner for any correction. I don't see stock price correcting furthermore. Maybe 1,900, 2,000 levels is where it can form a good base, and good value buying can emerge, or strong value buying can emerge thereafter, sensing the kind of turbulence we are into. And don't expect fireworks in say next 15-20 days. If you are a buy and hold kind of an investor, so this is a good stock to keep on accumulating, and target for 2 years is 4,200.
All right. That's all the time we have for today. Thank you, gentlemen. Thank you for taking the time out. And viewers, thanks a lot for tuning in. We'll be back tomorrow, same time, 11:30 a.m. So do keep sending us your questions and we'll take them tomorrow. Until then, stay tuned to BQ Prime.